Welcome back. So we are counting down to E-Day, as we are calling it over here, with the US election really taking center stage. But then, as always, lots of individual stocks on our radar as well, some earnings to go over. We have our team joining in with the CNBC-TV18 list of top stocks to watch. We'll start off with Sundaram, who's looking at a bunch of EV launches that are coming in. I think Eicher as well as Maruti is coming out with some new models. Sundaram, morning. Tell us more.
Morning, Surabhi. So there were two EV launches. One is from Maruti and another is from Eicher Motors. So first talk about Maruti. Suzuki Motor has launched first electric car and they have named it e-Vitara. And production will be done at Suzuki Motor plant in Gujarat, and company is expected to begin sales in 2025. And China's BYD will be supplying batteries for e-Vitara, and as of now, there are two options will be offered. First, one will be in 49 kilowatt and second will be in 61 kilowatt. And competition that it might face from is Tata Curve and the upcoming Hyundai Creta EV, and next is Mahindra, that is BE6E. For Eicher Motors, Royal Enfield has entered EV space finally, and they are launching new EV brand by naming Flying Flea, and it would be all new electric mobility solution for city plus space. And for now there are two variants. One is Flying Flea C6 and second is Flying Flea S6, and launch first model that company is planning to bring in the market is in 2025 or early 2026, and competition it might face from. So as of now, Indian two-wheeler EV market is majorly led by scooter segment, and they have limited offerings in bike as of now. So Ola's first EV bike is going to be launched in FY26, and also Hero is planning to bring portfolio of electric motorcycles. In the first portfolio, they might bring in 6 motorcycles. So these are the competition that Eicher Motors might face in the next 1 or 2 years.
Interesting. Flying Flea. That's an interesting name as well.
Looks quite good as well.
Well, thanks, Sundaram, for that. So Flying Flea. Wonder if we're going to test that out.
I would love to. It looked quite good, quite impressive actually. But let's talk about ABB India. Vamakshi is here to dissect those numbers for us. Morning, Vama.
Well, good morning, Nigel. ABB reported a weak set of numbers. When you look at the order inflow, it came in at 3,342 crores. This is slightly below with what the analysts were working with, and slightly below the 3,500 crore odd order inflow run rate that we've seen over the last 2 quarters. But the order book, that was at a record high, and that is because the order book has tilted towards long cycle orders, and this in turn has impacted their revenue recognition as well. That is because the higher share of long cycle orders means that there is a lag between order booking as well as revenue recognition. So therefore, revenue has grown at a slower pace of 5%. It has missed estimates by 11%. The robotics and discrete automation as well as process automation revenue has seen a decline of 6% and 12% respectively. But the EBITDA margins, on the other hand, have seen an expansion of nearly 272 basis points to 18.55%. And this improvement is largely being driven by the improvement that we saw in the gross margins. Gross margins expanded by 670 odd basis points, and that is because the raw material cost came down by almost 6%. The EBITDA, on the other hand, given the slow growth in revenue, saw an uptick of 23%, but missed estimates by almost 8%. Net profit too came in at 440 crores. This is nearly 8% lower as compared to the street expectations. So overall, doesn't seem like a good set of numbers, but the EBITDA margin has expanded. That's the only positive this time around. The con call for the company is scheduled at 10 a.m. today, so we will be watching for the commentary that comes through from the management.
All right, Vamakshi, thank you very much for that. Now, battery makers also reported numbers. There was Amara, there was Exide. Sudarshan is here with details on both. Sudarshan, morning.
Morning, Prashant. So Exide reported earnings during market hours, so I'll talk about Amara Raja. It was a soft quarter. EBITDA has missed estimate by 5%. Gross margin has expanded sequentially, and it was based on favorable product mix. But on YOY basis, even gross margin was down more than 100 bips. For Q2, revenue is increased 12%, EBITDA was up 8%, and margin has slipped 50 bips. Company says it has infused 55 crore into Amara Raja Circular Solutions, and total investment in Amara Raja Circular Solutions now stands at 500 crores. So I'm going with red for Amara Raja.
Okay, got it. Thanks, Sudarshan. We'll keep it on our radar as well. Some more numbers now. Abhishek is looking at the performance for Sundaram Finance. Abhishek, how is it?
Well, it's the weakest amongst peers with respect to the disbursals momentum that you are seeing for Sundaram Finance. Disbursals have declined both YOY and quarter-on-quarter, YOY by 1.2% and sequentially by 0.7%. However, the AUM growth has remained healthy at almost 20% YOY and about 5.2% sequentially, which suggests that the tenure of the loans have actually increased in this quarter versus last quarter. Asset quality has deteriorated. Gross NPA ratio has inched up by 18 basis point to 2.39 versus 2.21% in the previous quarter. With reference to the PNL, the NII growth is strong at 6.5% quarter-on-quarter, which suggests that my calculation shows that there might be a 4 to 5 basis point expansion on net interest margin. However, provisions have increased by 52.5% on a YY basis and about 6.5% sequentially, which has put the pressure on profitability. Profits are down almost 7% YY and they are up 10% sequentially. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Vivek. He's here to tell us about KEC. Morning, Vivek.
Well, good morning. Slightly mixed quarter from KEC. Execution remains strong. Ordering activity, order book, ordering trends in the commentary, they remain strong. What remained quite muted was the EBITDA margins, and it was a miss against the management's own guidance as far as FY25 was concerned. Looking at the numbers themselves, revenues higher by 13.5%, coming in at close to 5,113 crore. EBITDA higher by almost 16.5%. EBITDA margin at 6.3% versus 6.1%. It's up both on a year-on-year basis as well as on a sequential basis, but still below what the management had guided for, close to 7.5%. That'll be something that we will get clarity on from the management when they join us a little later. Net profit higher by almost 53%. When you talk about the order book trends, the YTD order book very strong, 34,088 crore. Additionally, the company's L1 in orders of over 8,500 crores, and the YTD order intake is up 50% on a year-on-year basis, and the company has reached more than the midpoint of its guidance of 25,000 crore of order inflow that it had given for FY25. Pipeline remains very strong as per the management, 1.5 lakh crore, and the net debt too has come down quite significantly on a year-on-year basis. It will be something, again, to ask the management on, given the fact that they had seen a ratings downgrade a couple of months ago. So overall, a mixed quarter. Margin missed the only bip as far as KEC is concerned.
All right, Vivek, thank you very much for that. Gland Pharma is the next one we want to focus on. Vinny is here with details. Vinny, morning.
Good morning. So Gland Pharma reported their Q2 FY25 results. Not an exciting number coming in from the company. The key highlights, the core market, yes, that growth for the company over there was impacted because the US sales didn't do well. Weaker than expected pickup in terms of sales in US as well as the rest of the world. That was also a miss versus what the analysts were expecting. And the company has lowered their FY25 guidance. They said that they would achieve a low double-digit growth. Previously, they'd spoken about mid-teens. So keeping an eye out on the guidance also and how they're going to be performing going forward. Financials, when you look at that, revenues just saw a growth of around 2.4%. Profits of the company saw a decline of 15.7%, while margins also have seen a contraction coming in at just 21.2%. Analysts, after this, have lowered their guidance. Goldman Sachs has lowered its FY25 to FY27 EPS estimates by around 4%. Investec has cut the target price for the company to 2,055 rupees from previous 2,500. So we're expecting Gland Pharma to open up in the red. Not an exciting set of numbers today.
Okay, all right, got it. Thanks very much, Vinny, for that. So lots of numbers on the radar. And here's one more. Bata India. Mangalam looked a little sluggish.
It is a little sluggish, and we've seen that trend with a lot of the consumer companies as well. It's difficult to, push out products, and that's exactly what took place there as well. Continuing market headwinds and subdued consumption is what the management attributed this quarter's performance to. But in that, the only thing which is standing out is the premium products. For all the FMCG companies, premium products are doing well. Bata is no different from a consumer discretionary standpoint as well. They showed robust growth and increased their contribution to the overall revenue mix. But that accounted for as well. The overall revenues grew just 2.2%, and that led to a decline in EBITDA because the EBITDA were down by almost 3.7%. Which meant the margins compressed from 22.1% to about 20.1%. And at the same time, the net profit had seen a decline on an adjusted basis. Of course, on a reported basis, it's a jump of 53%, largely led by a 40 crore exceptional expense in the base quarter. I see the stock opening in the red, but with the festive season and the second half being stronger, do we see some buying on dips is something that we'll have to track for Bata this time.
Okay, all right, Mangalam, thanks a lot for that. But back to you, Vinny. Tell us about RVNL.
RVNL is in focus. We're expecting a positive up move today in the stock. They've received an order. 625 crore project is the cost of the order. L1 bidder from the Southern Central Railway. It's an EPC project. This project will be mainly focusing on a doubling of the tracks between certain stations. So keeping an eye on that. A big project win coming in for RVNL.
Okay, all right. Let's see if that excites the stock at all, because yesterday a lot of PSUs were down with the rest of the market. Vinny, thanks for that. Let's quickly head back to Sudarshan. I think there's some news on Bharat Forge as well. We've got the North American Class 8 truck orders data. Sudarshan, how does it look?
So normally for the month of October, historical data suggests that October orders are normally healthy as fleets start building up for the next year and they start ordering it. But for this time, October orders are down 6% month on month, and on YOY basis, it's up just 2%. And analysts say October orders fall short of seasonal expectations. And if you just talk about this month, total orders have come in at 28,300 units versus average of last 7 years of 33,940 units. So down almost 15 to 16%. Also, analysts believe some fleets are being cautious as they order new trucks for 2025, and orders in October typically increase slightly from the prior month. So overall, it's minor negative for Bharat Forge for today's trade.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's do a quick recap of all the top stocks that we've covered. Stocks with positive news flow include Eicher, Maruti, as well as RVNL. But we've got a lot of stocks reacting to negative news flow. ABB India, Amara Raja, Sundaram Finance, KEC, Gland Pharma, Bata, and Bharat Forge. Time to slip into that snappy break. Come back. Hemang Jani is waiting for us. He'll help us out with some more fundamental stock talk.